Navigating modern financial apps can sometimes feel like solving a puzzle, especially when you are trying to figure out what technical requirements are mandatory before you can access your own money. When it comes to using a popular cash advance platform like EarnIn, understanding how it connects to your personal finances is a crucial first step. People often look for ways to bridge the financial gap between paychecks without dealing with high interest rates, credit checks, or traditional payday loans, making apps that tap into earned wages an attractive alternative. However, because these applications operate digitally and deal directly with your earned income, they have specific infrastructure needs to function smoothly. The short answer is yes, EarnIn absolutely requires a checking account to function. In fact, having a valid checking account is one of the core foundational requirements built into the platform's entire system. Without a linked checking account, the app simply cannot operate. This is because the core mechanic of EarnIn relies heavily on electronic movement of funds. When you request a cash out for hours you have already worked, the platform needs a secure destination to send that money instantly or within a couple of business days. More importantly, the system requires a checking account so it can automatically debit the exact amount you borrowed once your regular payday arrives. The entire repayment cycle is automated, syncing directly with your employer's direct deposit schedule hitting that specific account. A common point of confusion for many users centers around the type of account that is acceptable. EarnIn specifically requires a traditional checking account. If you are thinking about using a standard savings account, a prepaid debit card account, or certain types of non-traditional mobile wallets, you will run into compatibility roadblocks. EarnIn explicitly states that its services are not compatible with savings accounts or standard prepaid cards. The financial architecture of the app demands a checking account because checking accounts are designed for frequent electronic debits, credits, and direct deposits, which match the weekly, bi-weekly, or monthly cadence of standard payroll structures. Furthermore, the checking account must be tied to a recognized financial institution based in the United States. During the account creation process, the app will prompt you to securely link your banking institution using online login credentials. This step allows the platform to verify your identity, analyze your income history, look at your regular direct deposits from your employer, and calculate your available earnings limit. If your bank is entirely unsupported by the platform's third-party connection tools, or if you cannot successfully link a traditional checking account, you will not be able to complete the registration process or use the cash-out features. Beyond just having a checking account, there are a few other tight dependencies required to make the system work. You must have a steady pay schedule with direct deposits coming into that checking account, and you typically need to verify your employment through a work email address or regular GPS tracking at a fixed work location to prove you are actively earning wages. The checking account acts as the anchor holding all of these moving parts together. It receives your primary paycheck, it houses the funds when you take an early cash advance, and it handles the automatic payback deduction seamlessly when payday rolls around. Therefore, anyone looking to utilize the platform must ensure they have an active, compatible checking account ready to link before attempting to sign up and request funds.